What is up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Now, before we get going, please hit subscribe and hit that little thumbs up, that like button down below. Apparently, it really helps. So thank you for always doing that on my videos. Now, Bitcoin has been correcting over the past few days, and we have a lot of people panicking and screaming for much lower targets. But today we're seeing a nice bounce, so it's time to look into the charts and see whether this correction is likely over and this bounce is real, or if we can expect more downside. We will dig into the charts at the end of the video, so stay tuned for that. But first, I want to dive into all the news that's driving the Bitcoin and cryptocurrency markets today. First, I absolutely love this title. Bitcoin's risk-reward ratio suggests bull run has plenty of scope to continue. Bitcoin's reserve risk metric indicates the cryptocurrency is nowhere close to a major price top. Go ahead and just talk dirty to me, CoinDesk. How can you not love that title or that idea? As they say here, Bitcoin's reserve risk metric measures the risk-reward ratio of investment based on long-term holders' confidence relative to the price at any given point of time and is currently seen at 0.008. That's well short of highs above 0.002 seen during the bull market frenzies of December 2017, December 2013, and June 2011. You can see this visualized right here on the chart. It's very clear. Bull markets start in green and bear markets start when we go into the red, which is around 0.02. We are not even close yet. If you're wondering how they get this metric, they say right here, reserve risk is calculated by dividing Bitcoin's price at any point in time by the HODL bank, as detailed by Glassnode, which represents the opportunity cost of holding an asset. Each day a coin is held, the owner defers the ability to exchange it for its cash value. Nobody wants that dirty fiat. They're trying to keep that sweet Bitcoin. This indicates bull market has a long way to go. Next story, Time is seeking to hire a CFO who understands Bitcoin. Now, they haven't said why, but I think it's very interesting that the person who oversees the brand's money matters, the CFO, would have to have an interest and understanding in Bitcoin. We also saw recently that Time magazine is selling a couple of their covers as NFTs, so clearly they're interested in the space and they're looking at it. This screams to me that they're either going to start accepting Bitcoin payments or they are considering putting Bitcoin on their books as a treasury asset, much like we saw from MicroStrategy and Tesla. Let's go, Time magazine. Next, the Boston Fed, MIT, to release digital dollar prototypes as soon as July. We've talked about this a million times. Central bank digital currencies are coming. A digital dollar is coming, and it's only a matter of time. We've already seen it tested and being used in China, and the United States is behind. What I found really interesting here is that they declined to say whether they were using blockchain technology. Can you imagine if they created a digital dollar and it was not based on the blockchain? That would be absolutely absurd. We know that it's going to be, but I really find it interesting that they're unwilling to say it right now. The future of money is digital, and I truly believe that the development of central bank digital currencies will drive more people to Bitcoin. Google searches for Uniswap are booming. People love their shitcoins and they want more. Google keyword search volume for the Uniswap, a useful indicator of interest in DeFi more broadly, has reached its highest point since September of 2020. In fact, I believe it is up 10.1% compared with last week. This is a great metric for seeing how interested the general public is in DeFi and in exploring other avenues of cryptocurrency outside of Bitcoin. This can only be a good thing, unless, of course, they get rug pulled. And that does happen, unfortunately. Now, my namesake, because I obviously stole his name for the Wolf of Wall Street, the Wolf of Wall Street, Jordan Belfort, predicts Bitcoin hitting 100K. This is interesting because he was a critic. He agreed with Jamie Dimon when he had negative things in 2017 to say about Bitcoin. Belfort, previously a Bitcoin critic, now says he believes the cryptocurrency holds advantages over stock. Maybe he just wants to get really rich again and realizes that Bitcoin is the best way to do it, but he cited his support for Bitcoin because of institutional investors and the support that it's getting from institution, and also that it has a limited supply, which gives it an advantage over stocks. No shit, Sherlock. It's nice to see that some of these guys are coming around to things that we've been saying for years. That's the bulk of the news that I have to share. So now I'm going to dive right into the charts. First, we have the daily chart. As you can see, we've been correcting ever since we topped just under 62,000. But is that a big deal? I don't really think so. I think that this is just another healthy correction. Now, as I'm recording this, it's 1:10 p.m. Eastern Standard Time, and the daily close is not till 8 p.m., so it's too early to judge this daily candle. That said, we have a nice long wick down and a huge gray, for most people, green body. This is an exceptionally bullish candle. We'd love to see the volume catch up to the previous selling volume of the other candles, but in general, this has been a very, very low volume sell-off that looks like it could be ending with this very bullish daily candle. Tune back in a few hours to see if that candle confirms. Now we can zoom in here on the line chart, which shows that we have a very clear descending wedge, which if we see another drop could become a bull flag. I've also drawn the same resistance on RSI. Often if you draw a pattern on an indicator, you'll see it break out, which will tell you that it's about to break out as well on price. So I will be watching that. If we break through this resistance, I think that we start talking about higher targets again, well above the 62,000 top and even potentially into the 70,000s, especially if this forms a bull flag. That would give us a target based on this flagpole. That would give us something like this, up in the 72,000, depending on where it breaks out. But that would require this to drop down a bit further and give us a parallel channel. Now let's look at what it looks like here on the 4-hour chart. As you can see, we've been ranging between that 62,000 level, exactly 61,788, and 53,223. You can see that here with this red range. We lost the EQ, that's that center line of the range, and that usually means you will drop to the bottom of the range. So what happened? We dropped all the way to the bottom of the range, but we have this beautiful candle here that swept the lows, which is a bullish swing failure pattern, or SFP. That indicates that there was a lot of liquidity engineered in this area. That happens when you see support broken by a wick, but the candle closes above. The longer the wick, the better, right? So what does that mean? That means if somebody wanted to get long and they wanted to fill a whole bunch of buy orders but didn't have liquidity to do so, they would actually sell down to this area. Why? Because they need a whole lot of sellers to be able to buy. And what happens when you break support? This is where people put their stop losses for the longs that they've been holding. That means those become sell orders when the stop losses trigger. That's also where you have a lot of liquidations right below support. And finally, when price breaks that level, you have a lot of people waiting to short on that confirmation, and people who don't wait for the close below often short, also sell orders, filling liquidity on the way up. And at present, but this will be very different by the time the video comes out, we are breaking the key local resistance at 55,543. Also looking at the 4-hour chart here, we had this bull pennant, which I said countless times, bull pennants almost always break support and become different patterns. We saw that here. So for now, we can draw something like this. You could say it's a descending wedge, a descending triangle. People view descending triangles as bearish, but they break up about 63% of the time in an uptrend. So that's not true. But again, if this completely goes down further, it still would not be bearish. We would probably form something like a bull flag and could come down into this key demand support level right around here. I don't see anything overtly bearish about the charts right now. I still think that we are in very much the mode of a healthy correction in an exceptionally bullish market. And I think much, much higher targets in the 6 figures are in order for the coming months and the rest of the year. That's it. That's all my thoughts on Bitcoin and the news today. Once again, please subscribe, hit that like button. And I also encourage you, please, to join my newsletter. Tomorrow at 2 p.m., I will have my chart request session for paid newsletter subscribers where I will chart anything that they request. Thank you guys for listening, and I will see you tomorrow. Peace.